Good morning, traders. Welcome to the TMT Stock Market Strategy video for Thursday, January 26th. We did get the follow-through that we were talking about yesterday morning. I said, okay, one day doesn't make a trend. Let's see if we can get 2 days out of this pop up higher. We talked about the buy stops and the sell stops are between that horizontal channel. I'll show that to you in the charts and the spiders. We showed that to you yesterday. And it's really a 50-50 shot when you do something like that. But if you wait patiently and you could pick some good setups, you would be rewarded. So hats off to the guys who waited. There's a lot of shorts that got hurt because now we're moving higher. Dow 20,000. What does that mean? It means absolutely nothing, guys. Do not listen to Bloomberg, CNN, and Fox News, and CNBC, and Michelle Caruso Cabrera, and Bill Griffith, and all those guys that talk. Wow, we hit Dow 20,000 for 4 to 5 weeks. That's all they were talking about. It means absolutely nothing. Just a milestone number, 20,000, as it did for 10,000 15 years ago, whatever the day was. I'm just telling you. Now we have everybody long, everybody. And what did Mr. Donald Trump say in his campaign? We are in a big fat bubble. Okay, so as day traders, we really don't care. We'll just keep buying. And what we would do is look to buy pullbacks and look to buy the high probability trade. And if it's not there, we do nothing. And that's really what it comes down to. Patience is a virtue in this market because this market is getting everybody long. But internally, there's a lot of things breaking down. I'm going to show you one. I'm not going to get into it. Yesterday's video was a little bit long. I apologize. NYUD, Vance Decline with volume. You could see here clearly, lower lows, lower highs, lower lows. What happened today? Absolutely nothing, and why the market is moving higher. Markets are internally breaking down. Okay, we have intermarket divergence. This is not something that I would be looking to add. Now, remind you guys, we could go up another 100 points. As a matter of fact, my projections right now are S&P 23 to 2350. Okay, and that's only about 60 points away. S&P points, so really not that much. And if you want to get into a long-term trade, you just gotta be careful, because what happens is to the longer-term investor, it'll come back. And what happened? You just basically got flat on the 2000 crash with the Nasdaq. You just got flat 16 years later. I mean, where did you go? Nowhere. If you held that long, even. So guys, just what I'm saying, just be careful out there. Don't get caught up in the euphoria, the propaganda, if you will. And I call it propaganda with the news media. And that's really what it comes down to. Do your own homework, get your fundamentals straight, get your technical straight, and make sure it complements your trading plan. All right? UUP. I'm going to cover some stuff today. I'm going to cover the crude oil and a little bit more in depth on gold. All right, here's the dollar. What we want to see is, and what I think is going to happen based on our technical view here, we have dollar did break down. It's 1 day breaking down from our major support and of course our trend line. But let's see if we can get back up to here. We get a little bit of a bounce in the dollar. That's going to do what? That's going to put additional pressure on commodities, right? So let's go right into the commodity sector, okay? And as you know, I'm a big seasonality fan as well as equipment and trader reports, because that does help piecemeal a good trade when everything lines up. Here's the spiders. We had our and I showed the premium video yesterday. You can go take a look at that. You can see here clearly that we have now officially broken out. Okay, that is a good sign for the bulls. Target 231, 232 at the upper end of this big bearish rising wedge. This is our fifth leg. This is confirmed our fifth wave. Excuse me, not leg, wave. 5 waves off the lows. This is going to be our fifth wave. Now, where does it stop? No one knows, but be ready for when it does stop and the market does pull over. And then we're going to need a catalyst. There's no question about it. Once we get the catalyst, then we'll look for some downside pressure. Right now, there's just everything literally just buying them up. There's everything that's overbought. Again, that wasn't overbought because we were kind of stagnant for 2 months, is now screaming overbought. Okay, here's the TLT. And I said yesterday, I'm looking for this breakdown. Once we break down, I'm looking for it to pause. If it pauses, this is where we're looking for some shorts. this is a bull flag here, okay? You can't deny that, right? So it is a bullish setup. Let's see if it breaks out of the bull flag, and if it fails, that'll do what? That'll make a lower high from this previous high, and that'll initiate new sell signals for TLT, because I do believe that rates have made a generational low and are actually moving higher, okay? So that's what I'm looking for in TLT. Now, it doesn't have to happen, but when we have no risk and protection coming off, meaning TLT, gold, they are high interest sensitive names, when they start to go, then you could see clearly that that everybody's leaning one side bullish. So just keep that in mind. All right, let's move on to the next. Oil. Okay, interesting. 55.24 is the high. This is where we need to take out the high in order for us to continue with this big and large ascending triangle, okay? If we fail again, as you can see, we've been basing here for almost 2 months, just don't have enough momentum to break out. We're going to fail, and 40 is going to be the target, the first target to the downside. Well, obviously, we'll get that 200, but the bigger pitch will be 40. And if we lose 40, I think we start headed lower. Setting up for a good trade, I'm going to show you why. Let me get this out of the way. Okay, here is the commitment of trader reports, where crude oil, the producers, are the most heavily short now, as you can see, pretty much all of 2016. Okay, so they're expecting lower prices in crude as they hedge of what they're taking out of the ground. They are the smart money. They are the ones that need to hedge, as they feel at $55 we're fully priced in crude. Okay, just a word of advice, just be careful out there. Okay, next is going to be gold. I want to show you the commitment of trade report in gold. As you can see, the producers were bullish on gold for the last 6-7 weeks. Now they're starting to get a little bearish here. It doesn't mean that it's starting to look to go down, but you could see that as we're starting to top, we're starting to increase our short interest in the commitment of trade reports for the producer. So that's just another sign, just to use a little word of caution. The Huey, the gold bug index, weekly chart, big. As of right now, it's Wednesday. Today is Thursday, and we have a doji candle underneath the 50-week moving average. Looks like we have basically just a corrective move. This is, to me, looking for lower prices. Okay, I do think gold will test the lows or get close to the lows that would make a higher low from the previous low. And this is the gold bug index that I'm talking about, as well as gold itself. Here's GDX. Now I have this slanted neckline, and why am I doing this? Because I'm looking for, and as a technician and trader, you want to kind of, see what you can piecemeal here, right? What does that look like to you? Inverted head and shoulders pattern, very bullish. Okay, I'm looking for possibly, and just possibly, if the market and if GDX could come down, maybe base a little bit more, create that right shoulder a little bit more in depth, and then we take a breakout. And then if we break out, 24 would be a good spot, and then we're looking for higher prices here. But you could see that it is shaping up to be a nice inverted head and shoulders, which is a bullish pattern. Okay, so let's see what happens here on that break of 24. Here's the GLD, which is the gold tracking ETF, and as you can see here, I think this is just corrective. I think this will start to move lower as risk comes off. As hedging comes off. That's another story. As you can see, we're at the top of the channel. I'm looking for lower prices, but I'm looking for it not to test the lows. I'm looking for the price to actually make a higher low from this previous low. And if we can base, right, I'm a big fan of horizontal bases, take out that local swing high, and I think we're off to the races. Okay, so let's keep an eye on that in the coming weeks. IWM, and as you can see here, we mentioned yesterday, we do have a really a nice, well-defined bull flag, right? Nice, what do you want to go here, or you want to go from here? It's really up to you. But we're out of that bull flag, and this is off of the TMT proprietary videos. You can see here, we take that 138 out. I think we're going to actually really take out a lot of the stops. They're going to push them. And what I'm really thinking, and again, price is what pays us. I'm thinking we pop and then we drop. Okay, we get everybody long, and then all of the institutions that are long this Trump rally are just waiting for that last and initial pop going into the end of the first quarter, possibly February, next month, March, maybe even April, we start to really get some good. Either way, volatility is here to stay, which I love, and that's going to create opportunity. So I always say TMT, volatility creates opportunity, okay? And if you play it right, we're going to make a lot of money. That's the bottom line. Transports, okay, I'm going to take this off because it really wasn't, it really didn't look like such a great head and shoulders, but we want to, like I said, piecemeal, try to get some kind of pattern. If anything, maybe a double top, and then we'll see where this goes. But if the transports are moving higher, that's a good sign, guys, that we're going to continue to move higher, at least in the short term. And here's that Diamonds IYT chart, that the Dow Jones and the transport. So you could see that that we're clearly leading. Transports are leading, and it is our leader, so that's a good sign. Big move in the Qs. Facebook up, Apple up, Google up, Baba up. I showed you Baba's chart yesterday. So see what happens. We're doing well, but you know what? I would not be committing any money up in here. Not at all. I would not at all. I wouldn't. Otherwise, you wouldn't be you'd be losing a lot of sleep. So just be careful out there, guys. Be disciplined. Use your stops. If you're still looking for big moves up, and if you're thinking the Dow's going to 25, 30,000 in the short term, I'd definitely be buying protection because it is cheap. Have a great day. We'll see you tomorrow.